Welcome to today's market report. European stock markets edged to new record highs in early trade on Monday ahead of another full week of earnings and the European Central Bank meetings on Thursday. DAX in Germany climbed 0.2% higher, another record high. CAC 40 in France rose 0.2%. FTSE 100 gained 0.1%, climbing to a new 52-week high, while the blue chip Euro Stoxx 50 rose 0.1% to an all-time high. Global stock markets have been riding high of late, helped by strong corporate earnings. The expectation monetary policy will remain accommodative the world over and continued rollout of COVID-19 vaccines. In Europe, ABN Amro stock rose 2.4% after the Dutch bank agreed to pay a fine of €480 million to settle a criminal investigation into money laundering by prosecutors in the Netherlands. That, along with sustained strength in semiconductor and chemical stocks, pushed the local AJAX index to the new record high. Danske Bank stock fell 1.5% after the CEO of the Danish bank, Chris Vogelzang, resigned after Dutch authorities named him as a suspect in ABN Amro probe. CNH Industrial stock fell 4% after the Italian-American company ended talks with Chinese company FAW Jiefang over the potential sale of its Iveco truck and bus business. Juventus stock rose 6.7%, AFC Ajax stock rose 0.6%, and Borussia Dortmund stock rose 3%, following reports of an attempt to form a new breakaway soccer league in Europe. Only JUVE of those three is a member of the proposed breakaway league. Later in the week, the European Central Bank will hand down its policy decision, with the central bank likely to keep the rate unchanged and to strike a cautiously optimistic tone on the economy. Elsewhere, investors will be keeping an eye on the growing tensions between the West and Russia over the jailing of opposition leader Alexei Navalny after the US warned of consequences if the dissident, now entering the third week of a hunger strike, were to die. The COVID-19 pandemic retains a menacing presence, with the UK government saying on Sunday that it's closely monitoring the spread of variants and cautioned it is too early to say if hospitality venues in England can be open indoors as planned next month. Oil prices edged lower on Monday, struggling to add to recent gains amid concerns that surging coronavirus infections in the likes of India could have implications for global economic activity. US crude futures traded 0.1% lower at $63.12 per barrel. Brent contract fell 0.2% to $66.69 per barrel. Both contracts rose around 6% last week. Gold futures rose 0.3% to $1,785.05 per ounce. On the FX front, the emergence of some fresh US dollar selling during the early European session pushed the GBP-USD pair to near two-week tops around 138.85 to 138.90 region in the last hour. Following a modest bearish gap opening on the first day of a new trading week, the pair attracted some dip buying and turned positive for the sixth consecutive session. The strong move up allowed the GBP-USD pair to build on last week's solid rebound from the 100-day SMA support near the 136.70 area and was exclusively sponsored by the prevalent bearish sentiment around the US dollar. Despite the incoming strong US economic data, investors seem convinced that the Fed will keep interest rates near zero levels for a longer period. This was evident from the recent declines in the yield on the benchmark 10-year US government bond, which sank to 152.80% last week. This in turn continued undermining the greenback and was seen as a key factor driving the GBP-USD pair higher. Meanwhile, renewed fears about another dangerous wave of coronavirus infections worldwide reduced investors' appetite for perceived riskier assets. A slight deterioration in the global risk sentiment, however, did little to lend any support to the safe haven dollar or hinder the GBP-USD pair's ongoing positive momentum back closer to the 139 mark, or the highest level since 6th of April. Euro-dollar starts the week on a strong note and finally manages to advance further north of the psychological 120 yardstick. The firm buying pressure is expected to meet the next interim hurdle in the 120.50 to 120.64 band. The US dollar was marginally lower at 91.523. This is today's market news. Thanks for listening. We'll see you next time.